Hello everyone, this is George DeSantos with the look at the market for the week ending January 15th, 2016. So I wasn't able to get data for the super charts that I usually use. So I'm going to use TC2000 today. It's a little different, but we have most of the same indicators on here. Um, the first chart in front of us is the monthly chart of the S&P 500. As we can see, the S&P came all the way back down to support at 1867 or thereabouts. It's different from the chart we usually look at in this respect, that when we use the instantaneous trend line and the Kalman filter on the monthly chart, we'll see this in the future when I'm able to get data for it. Uh, we had a crossover of the Kalman filter somewhere in June, July. So this with the 9 EMA and the 30 weighted moving average did not give us that crossover. So it was not as accurate a call on the monthly chart. However, we are just seeing the 9 EMA crossing below the 30 weighted moving average with this huge bar that we had for the current month. Now, we're hoping to find support here at 1867, because as we can see, if we go back in time, this is where we found support. We found support here, we found support here, and previously somewhere around here. So hopefully we'll find some support here. If we don't, then we have much further down to go, of course. If we look at the MACD histogram, we'll see that we crossed below the zero line way back here, early part of 2015. And since then, MACD has remained in bearish territory. And currently, we have a very large bar of MACD, histogram bar. At the bottom of the chart, Williams percentile broke below the minus 20% line, which gives us the support for a very high momentum trade. In other words, once the price is above, once the Williams percentile is above this 20% line, we can see that we had very nice uptrend. But once we started breaking down below the 20% line, momentum was falling apart, and it completely fell apart here. Now, the interesting thing is that we have Williams touching the 50% line now. And I like to use the 50% line as a measure of support. So when we look at the weekly chart, we'll see how that looks. Let's take a look at the weekly chart. Let's change it to the weekly chart. On the weekly chart, let me crunch the chart up a little. On the weekly chart of the S&P 500, we can see that support line at 1867. So right now, we can see that same support that we are hoping to find at 1867. Okay, if we go down to MACD, some interesting things here. On the weekly chart, when we've had this drop in August in price, in August, September, somewhere around here, right? MACD made a very low. Okay, it made a low at minus 20. We rallied back up. MACD, the market rallied up. MACD rallied to a high. But when we came back down to test this low, MACD is now showing us a higher low. So in a sense, although this is not a true divergence of MACD, it's not the strongest divergence, because for it to be so, this low would have to be lower than the previous low here. However, we have this kind of a divergence, which is not as strong as the typical divergence. This divergence of MACD here can augur well for the future in terms of a bottoming process. We'll wait to see how that develops. On Williams percentile, with a 30 period, of course, which is what I use, we broke below the 50% line, and we are now below the 80% line. That's clearly an indication that momentum just fell apart. Now, interestingly enough, again, we are at the very low levels that we achieved, pretty much the levels we achieved back here in August, September. So we'll want to see now, the big question is, are we finding a bottom here? That's what most people are interested in. So let's take a look at the daily chart. On the daily chart, we can see a couple of things. Obviously, we were making lower highs, okay, and then we had this big drawdown to hit that level of 1867. We broke right through the 1950 level and everything else. Looking at MACD, here's what we see, of course, in retrospect. MACD made a high as the market rallied up, made a lower high here, but it was still above the zero line, and then fell apart as the market lost strength here. When the market made this high, MACD couldn't muster up more of a move than this level here, which is significantly lower than what we had back in October of 15. Okay, so now MACD is way below the zero line, and we're looking for some indication that we may have hit a bottom. What are those indications? I would like to see a divergence of MACD, a true divergence of MACD from excuse me, from price, which would mean that we go up, we make a rally, we have a rally, we come back down, make an even lower low, and MACD gives us a higher low. That would be one indication that we may have had a bottom. We put in a bottom. Another thing that I would be looking for is for Williams percent R to cross again above the 50% line. That would confirm the trend changing. In other words, we made a bottom. As long as we're not above the 50% line, I won't be too enthusiastic about buying the general market, although some individual stocks may look more attractive. So the next thing I would like to do is to go back to the weekly chart. And at the weekly chart, I want to show some other indications of when we might call a bottom. You can see we're looking for hammers, okay? Here is a candlestick hammer, and then these three bars made up a morning star, a very bearish bar, a hammer, or small bodied bearish candlestick, and then a very bullish candle. And from then we had a nice rally. We might also look for a bullish engulfing candlestick, something like this candle here, okay, which is a bullish engulfing candle. And a morning star, as I said, a morning star candlestick formation. All of this would show up if we do have a double bottom. Now, in conclusion, unless we are in a major bear market, as some people are saying, what I'm looking for is this. The market rallies back up to 2000 or in that vicinity. That's where you have your instantaneous trend line. That's where you have your 9 EMA and the 30 WMA. So the instantaneous trend line would be somewhere around here too. However, so we get a rally back up here, then we come back down and we test this level about here. That'll give us a double bottom. And unless I see that, and then subsequently we break above the 9 EMA, and the 9 EMA crosses back above the 30 WMA, those things are really what we're waiting for. I'm waiting for in order to confirm to me that this trend is now changed to an uptrend. So with that in mind, I'm going to say goodbye. That's the end of my look at the market for the week. Have a nice weekend.